everybody. Earnings season is wrapping up and the market continues to steamroll higher for the ninth consecutive day. That is until today. We just had our first down day in 9 days. Needless to say, let's continue right along as we do our Dash Trader Newsroom. My name is Michael DeJoy. I'm the Director of Educational Services here at Dash Trader, and I'm joined by my co-host, Jill Molandrino, Global Markets Reporter from NASDAQ. Jill, how are you?
Good, doing well, Mike.
That's awesome. That's awesome. Jill's down in the NASDAQ market site, and as usual, but you got all kinds of travel ahead, so good for you. Enjoy the action. Needless to say, let's jump right in. What are your thoughts as earnings season is coming to a close? Are we already looking forward to the Santa Claus rally, the holiday shopping season? And what was the overall feel for earnings season?
You know, it's interesting. I thought earnings actually performed the way that kind of made sense. If you made your quarter but did not have strong guidance, you're definitely got hit with the stock. If you made your quarter, had great guidance, you certainly got rewarded. And that's typically the way that earnings season should play out, right? In normalized markets. So I thought it was interesting that you were rewarded for good performance and then you certainly weren't. I feel like over the past 2 to 3 years, a lot of companies got passes for this reason, for that reason. And it seems to be that higher interest rates, COVID supply chain issues, all of that, it's been baked in. Those passes are no longer, what the market is going to be more, I guess, loose with, if you will. Of course, we're going into the seasonally strong part of the year. And, we saw that play out in November. Of course, today there's a little bit of volatility following, Powell's comments. I am still actually trying to go through them. I was on set at the time, but it sounds as if perhaps they weren't quite as dovish as the market had expected. Although, I mean, I don't think there's any expectation that there's going to be a shift in policy. I mean, rates higher for longer. If you look at the CME Fed funds rate, I mean, no one's expecting anything till second half of the year. So, I think how it's being interpreted, I just don't know how else market participants would interpret this.
Yeah, well, I mean, we saw that massive 9-day rally start after the Fed pause, which, I'm taking that was interpreted by traders and investors as rate hikes are coming to an end and we possibly are having a reversal. I mean, which seems delusional to me because that's not at all what they've been saying. Mm-hmm. So we get this 9-day rally, which I would say, being a trader was probably generated by short covering. So if you were short, you had kind of like a double top formation, and we had a triple bottom formation, and then we rallied strong off that triple bottom, which was short covering at first, and then it kind of got no buying. There was nobody came in to buy at the top of the 9-day pattern. There was no retail commitment, no institutional commitment. Yes, the algos, buy off the triple bottom, the rejection of the low. But to me, it seems like at this point, Powell's comments today are just, taking some of the delusional elements out of the market and reiterating the fact that he didn't say he's going to start, lowering interest rates. He just said that we're not raising them right now. So yeah, I think it was a little bit of delusion. And I don't know if you agree.
I do agree. And I feel as if last week, especially, it was almost like a liquidity suck.
Yeah,
totally. But I mean, even think about it this way: there's not much going on. I mean, there's not, any data. I mean, you have a couple of key earnings here or there, but for the most part, what are we, 85% for the season? I mean, there's just nothing going on, and that always happens. I feel like fourth quarter is somewhat of an exception because you have the seasonality and the strength at the end of the year. Everyone's so focused on the consumer and what spend's going to look like Black Friday through the end of the year. Or you could argue, Black Friday deals are kind of happening all year long, and a lot of those sales are being pushed forward, especially as promotional as they are. But if you think about it, outside of corporate earnings, where everyone is so fixated on what's happening with the Fed, interest rates, and inflation, it's almost like you have a liquidity suck, and any macro headline just, the market's still very skittish.
Without a doubt. And I mean, one thing that was very interesting to me was that obviously the war in the Middle East seemed to have been either a boom for the market or at least a non-issue. This is an absolute horrible, humanitarian and, human issue. But as far as the markets are concerned, It didn't seem to have really any major reaction, off the initial reaction. Now on a more negative side, on the negative side of the wall of worry, we have, which could, possibly impact this Santa Claus rally, or the possibility of there being a good holiday season, is that U.S. consumer debt keeps going higher, higher, and higher as it tops $1.08 trillion. What are your thoughts about what's driving the market higher here? Consumer debt, and certainly what's going on in the Middle East.
Right. I think we spoke about this with our U.S. economist yesterday on the show. We have to kind of lift up the hood when taking a look at consumer debt and compare it to where we were in 2019. I can't remember the exact data point, but I believe its credit utilization is actually lower than what we saw in 2019. So, it's always going to be the headline number that everybody focuses on. But when you compare it pre-COVID, you kind of have to, extrapolate something from there. However, 1 trillion is still a big number. Interest rates are certainly higher than they were in 2019. And, interest, student loans are coming back online. COVID savings are dwindling down. But so that's a whole thing. Like when you take away, okay, it's not higher than it was in 2019. However, you have higher interest rates, which just makes it simply impossible to keep up with for many people. Student loan payments were still happening in 2019. I know that very well.
Yep.
So, there's a little bit of a balance there. And, look at the cost of housing. Depending on your interest rate now, you could have gotten it at 3%. If you get in at 7.5%, 8% now, you can only afford half of what, half of what you could have afforded then. The monthly payment is literally the same if you have, 500,000 and then you're looking at something in the $250,000, $300,000 range, so you could afford it with the interest rates. Kind of shocking. And especially if you had an ARM mortgage, those adjustable rate mortgages or interest rate only mortgages, the rate of speed, how fast interest rates went up in under a year is quite shocking when you factor that into monthly payments.
And that they're potentially going to be going up even higher next year. And that we have, people have had to adjust for all this inflation in all of the consumer products that they've been purchasing to live. There's a lot to adjust to for the consumer. The question is what's driving the markets higher here? Do you think that, potentially, we did just kind of skirt correction territory and then we made a strong rally. What do you think for the end of the year as we go into the Christmas holiday season? Black Friday, Cyber Monday. Are these things that we should expect to be normal, or are we in this, not this year kind of situation?
It's always tough to bet against the consumer. We've seen that regardless of it's geopolitics, higher interest rates, the housing market, whatever you want to throw at it, they do continue to spend for better or for worse. I fully expect that to happen for the Black Friday season. People, and this is, whether the consumer's in good shape or not, they don't seem to really think about those factors until the bills start coming in January.
Yeah.
We've seen that over and over. My thing is that you have, I don't want to call it Black Friday, what's it called? Amazon Prime Day. You have it in July. I think there was another one in October. So they're pulling all of these things forward.
Yep.
Right. And it's not just that you have Walmart and you have all the other ones. And I have to be honest with you, for somebody like who finishes their shopping on Christmas Eve, I have literally taken advantage of some of those deals. And, I get them shipped. They sit in the closet. It's one of the things that I have to do. So that's going to be a few $100 that I'm not spending in December. So I'm going to assume I'm not the only person that has done this.
A very good point. Well, Jill, thank you so much. As always, have a wonderful weekend and safe travel.
All right. I'll talk to you guys soon. See ya.
See you soon. All right. So here's Dash Trader, end of day on Thursday. We gapped up. This is an extremely bearish bar. We had a gap up, gap and gap fade, right? We had a double top reversal, rejection of the double top. And now we have a wide range bar, bearish reversal bar. This is about as bearish of a pattern as you can possibly get after making a 9-day consolidated rally. This is the only thing that's probably bullish is that we haven't had higher volume. The volume is still pretty low. So what we would, if for the bullish argument, we would see this pulling back to the moving averages, and then potentially forming a bottom, which would be a low, and then a higher low, and then that would probably be good for the bullish argument. But it looks like we have a clear drop, at least down to 428 on the SPY. On the QQQ, we have a longer way down. We got, the bar is not so bearish on the QQQ. We got a bar down to 362. The one that's very interesting is Tesla. Very, very bearish down bar on Tesla. We kind of got knocked down below the moving averages. When price is below the moving averages, that's considered bearish price action. Microsoft, which was just at all-time highs, pretty much a double top, which is interesting because Microsoft squeezed all the way up on very positive AI news, and it put in a double top, and then now it's certainly selling off. But very, very, very strong bearish indication on the SPY, the QQQ, and certainly on Tesla. Let's take a look at Apple. So goes Apple, so goes the market. Apple at resistance, multi-bars up, first red day. Everything looks like it's going to start to sell off here. Needless to say, let's take a look at oil. Oil looking like it's starting to possibly consolidate and break out. Gold is pulling back, as you would expect, with all the uncertainty. All the uncertainty in the Middle East, gold certainly made a big run to the upside. Also, all the uncertainty in the Middle East really helped Bitcoin break out, as did Ethereum. I mean, Ethereum really had an incredible exponential move from 11.25 all the way up to $16 on the ETHE, which is the Ethereum ETF. And that pretty much sums it up. Let's take a look at, we can see some of the old economy stocks like X, not really affected. Alcoa, kind of at the bottom of its range. Just looking at some old economy stocks. GM also at the bottom of its range. Ford also at the bottom of its range. So there's a lot of stocks that are in a very bearish downward move. Let's take a look at the DIA. DIA, very similar to the SPY, starting to sell off. UVXY, which is one of the volatility. It's the 2 times volatility, making a big spike to the upside. All righty. Well, that pretty much sums it up for market analysis. Look for a small pullback at least until the moving averages, and see if we put in a higher low for the bullish argument. If we go through those moving averages like a hot knife through butter, then that would be a good, strong case for the bears, as that move to the upside got rejected, and now we're back in possible breakdown territory. So we got to see how far this pulls back. The pullback is certainly expected after 9 days. Now you got to see how deep it goes. So we just did our market analysis, which is to watch for a pullback. Certainly the market has finally stopped its 9-day run to the upside. We're going to watch where this pullback finally stops. It pretty much stopped today on Thursday, but it probably will continue to run down tomorrow. But we got to see how far that pullback actually does pull back, and then certainly see if that puts in a higher low, or if we continue down to the prior low. Stay up to date with all things DAS by signing up for our monthly newsletter. Simply fill out the form at the bottom of our webpage, dastrader.com. Subscribe to our YouTube channel, DAS Trader TV, and the DAS Newsroom reminders. Certainly, you can follow us on social media. We also have our #1 Best Trader competition going on. So we will be doing a #1 Best Trader competition wrap-up. So follow us on social media, LinkedIn, Twitter, Facebook, Instagram. Trade well, everybody. And we're all looking forward to see who our next #1 Best Trader is. Trade well.